Welcome back guys, nice to see you all. As you know, on Wednesday, core PPI will be released. Year-on-year estimate is sitting at 7.3% right now. Let's take a look at some very interesting factors and see how that will affect inflation and what will be the next number. So guys, let's start with the industrial metals. I've got the DJP over here on the daily chart. As you can see, the price at the start of September was 35.4 versus the closing price of 32.9, giving us a decline of roughly 7%. I've got this green 30-day moving average also available, which generally indicates a good average over the month. So if I look at this from the start of September towards the end of September, we can see roughly 2.6% drop. Industrial metals roughly cover 10 to 20% of the core CPI. So yeah, around 0.2 or 0.7%. This range is where the drop will come from the industrial metals. Keep this number in mind while moving on towards the most important thing, which is the US oil. Look at this. Start of the month was 86.3 roughly. Ending of the month is 79.68, representing another 7.6% drop. Following the similar approach, looking at the 30-day moving average, if I look at this, another 5.2% drop is available. And as you know, oil prices represent roughly 50% of the core CPI. So roughly 2.5% to 3.5% drop can come from the US oil. If I add the industrial metals into this, we will reach the 3 to 4% drop mark. So the last reading was 7.3, and if we apply the 3 to 4% drop, that will take us around the 7.1 mark. So yes, small reduction is possible, but the real problem lies in the month of October. Look at this huge pump in the US oil, 17% up, which means that next month's reading will be higher. In the event that US oil closes above 85, then yeah, that will not be good for the market because inflation will go up. Very similar thing can be seen in the industrial metals also, representing an increase of roughly 6% right now. So both things are increasing. Guys, this indicates that October will have a higher inflation, and that is not good at all for the market. Also, if we quickly look at the monthly chart for the US inflation itself, currently sitting at 8.3. The key thing I want to show you is look at this RSI level of 74 currently, and this is a very high level. It went up till 88, and 1980 was the time when we saw this RSI level. Before that was 1974. So a huge increase in inflation has been seen, and I am expecting something of this sort to happen very soon. Is it over the course of next 1 year, we can see a huge drop in inflation, just like what happened in 1980s and 1970s. And dropping inflation will also mean that the US Fed will start looking towards quantitative easing, or at least they will stop raising interest rates. So yeah, if labor market stays strong and inflation comes down, so that can actually give us a very good pump in the market. So guys, the data is in front of you. Let me know in the comments, what do you think? Do you think the inflation will come down anytime soon, or we are going to see another pump in the inflation and the Fed will remain aggressive? Let me know in the comments. As you know, markets are extremely volatile. If you are actively trading, please don't forget proper risk management. If you like this video, please don't forget to subscribe, like and share. Thank you for watching.